Welcome back, Focus Learners. Today, we're throwing on our detective hats for an explainer that honestly feels like a thrilling financial mystery. We are tearing into a massive mountain of data from the financial and valuation dashboard for Tidewater, that's stock ticker TDW. If you're someone who loves seeing how raw, hard numbers can tell an incredible story of transformation, well, you are definitely in the right place. So let's just dive right into this.
$152.64. Now, that's not just some random number pulled out of thin air. That is the calculated discounted cash flow fair value price for Tidewater stock. And in the world of quantitative finance, this specific figure tells us what the underlying cash flows suggest this company is actually worth per share right now, today.
And guys, here is exactly where our core mystery begins. Just look at this shocking contrast. The math is telling us $152.64, but the market's last close price, it's sitting way down at just $85.01. I mean, that is a massive discrepancy. The dashboard data is screaming that there's a huge 44.31% discount here. So, as financial detectives today, our main job is to figure out why. Is the broader market just missing something entirely, or is there a hidden catch we need to find?
To crack this case, we're going to process all this data step by step. We'll start with the turnaround mystery, hunt for valuation clues, check out the growth engine, assess the financial health, and wrap it all up with the final verdict.
All right, Section 1, the turnaround mystery.
To really understand where a stock might be going and why on earth it might be priced the way it is right now, we always have to look at where it's been. And man, this data illustrates a company that has lived two completely different lives. Back in 2017, this stock plummeted by almost 78%. Then in 2020, it dropped another 55%. Actually, if you look at the source data, the 10-year average return is a totally disastrous negative 66%. Ouch. But then, fast forward to 2022, and the stock literally exploded with a 244% return, and then followed that up with nearly 96% in 2023. This clearly tells us we are looking at a fundamentally changed company. It's like the market might still be holding on to the ghost of Tidewater's past, but the current reality? It's something else entirely.
Which brings us to a really critical concept for our investigation, and that is the margin of safety. This is simply the difference between that intrinsic fair value price we saw earlier and the actual market price. The dashboard indicates an absolutely enormous 44.31% margin of safety. Think about that. According to the data, you're theoretically buying a dollar's worth of assets and cash flow for roughly 56 cents. It's a massive buffer. It really emphasizes just how insanely undervalued the dashboard suggests Tidewater is right now.
Okay, moving right along to Section 2, valuation clues.
So we know the calculated fair value is super high, but let's take a look at the standard price tag metrics. How is the broader market currently valuing this company compared to its peers? Well, the price to earnings, or PE ratio, is sitting at just 12.75. The price to sales ratio is 3.14, and the price to free cash flow is 12.03. These ratios essentially tell us what investors are currently willing to pay for every single dollar of the company's sales and available cash. But the really crucial point here is that despite those explosive recent returns we just saw in 2022 and 2023, these valuation numbers are surprisingly grounded. I mean, a PE of 12.75? That's quite modest. It shows us that investors aren't paying some massive, hyped-up premium for every dollar of Tidewater's earnings. And that, my friends, is a vital clue in our investigation.
Before we go any further, I just want to quickly define CAGR, or Compound Annual Growth Rate. It simply smooths out the year-to-year volatility to show us the steady average annual growth rate of an investment over a multi-year period. Keep that in the back of your mind, because what we are about to see is frankly pretty wild.
Let's jump into Section 3, the growth engine. We've seen the grounded price tag, sure, but what exactly is driving this underlying machine? Well, we see a stunning discrepancy in the data here. Over the last 3 years, top-line revenue has grown at a very solid, steady 27.8% CAGR. That's great, right? But the bottom line, it is completely wild. The earnings per share, or EPS, over the trailing 12 months has an explosive CAGR of nearly 530%. Meanwhile, the net income 3-year CAGR is sitting at almost 159%. What this data is screaming at us is that Tidewater has incredible operating leverage. They aren't just making a little more money, they are converting that new revenue into an absolute explosion of bottom-line profit.
And what does that powerful growth engine actually yield for investors? Try a staggering 532.52% total return over the last 5 years. I really want to use this massive, honestly surprising number to snap our attention right back to reality.
The dashboard isn't just dealing in abstract theoreticals here. For investors who actually held this stock over the last half-decade, this turnaround has created immense wealth.
Next up, Section 4, Assessing Financial Health.
Now, fast growth is fantastic. We all love it. But it is incredibly dangerous if a company has to bury itself in debt just to achieve it. So, looking at these rapid-fire health metrics, they paint a very, very clear picture of stability. A current ratio of 2.90 and a quick ratio of 2.78 basically mean Tidewater has nearly 3 times the short-term assets required to cover its short-term liabilities, so they are highly liquid. But honestly, the most important number here is the debt-to-equity ratio of 0.50. Translating that simply, for every dollar of equity, they only have 50 cents of debt. This is a highly conservative balance sheet. They are funding all that explosive growth very, very safely.
Next up is a personal favorite, ROIC, or Return on Invested Capital, which is currently sitting at 16.93%. Why does this matter to us? Well, because it tells us exactly how well management is using its money to generate more money. And what's truly remarkable in the dashboard data is that this current 16.93% metric is up a staggering 322% compared to the company's own 5-year average. Management has completely flipped the script on their capital efficiency. Talk about a glow-up.
And you know, that efficiency bleeds right over into their incredible profitability. They boast a gross profit margin of over 49% and a net profit margin of over 15%. Furthermore, the free cash flow yield sits at a very healthy 8.32%. Finding margins like this, it's rare. It proves the company is highly efficient at turning its day-to-day operations into cold, hard cash. Cash that can then be used to supercharge the business even further or return massive value straight back to the shareholders.
All right, we've made it to Section 5, the final verdict.
It is time to synthesize all these forensic clues we've gathered and present the ultimate objective picture of what's going on here. Let's just recap the core facts really quick. We are looking at a massive 44.31% margin of safety with a calculated fair value of over $152. We've witnessed a historic turnaround resulting in a 532% 5-year return. We see an economic engine generating triple-digit EPS growth, and it's all protected by a super conservative balance sheet with a 0.50 debt-to-equity ratio. Ultimately, the data tells the story of a fundamentally transformed company, boasting huge growth alongside deep value and strict financial health.
Which leaves us with this final, provocative question derived straight from the data. With the 44% margin of safety, a pristine balance sheet, and triple-digit EPS growth, is the broader market simply missing the boat on Tidewater? It really seems like the historical trauma of this stock's past might be blinding the market to the quantitative reality of what the company is today. I highly encourage you to take these clues, dig deeper into the data yourselves, and see what you uncover. Thank you so much for joining me on this explainer, Focused Learners, and I'll catch you on the next Data Dive.